Hello and welcome to another Casual Friday, brought to you by FTX, specifically the FTX app, the best mobile trading app on the market. Go buy altcoins, go buy NFTs, go buy stablecoins. Looking at this monthly chart, some of those options are more attractive than others. We'll leave you to figure out what's being implied there. Hint, hint, nudge, nudge. But we'll get into market stuff. But first of all, thank you to FTX. Go support them because they support us and get the best mobile trading app on the market. So it's Easter weekend, right? Celebrating the resurrection of Jesus Christ. So speaking of miracles, you had a date this weekend, Don. How did that go? And the reason I bring it up, there's obviously a facetious angle to it where it's like, haha, time for, to troll the Don's personal life and so on. But I really feel like with the size of some of these, like some of our colleagues in the crypto space, I think it's only a matter of time before they cross the Rubicon from, crypto celebrity to kind of just real life / internet influencer, right? Because if you think about it, these arcs are pretty common. Like you'll get like FIFA YouTubers like KSI or gamers like PewDiePie or whatever. You can tell I'm behind the times with my references, but they'll build their audience or cult basically in one arena, and then people fall in love with their personalities, and naturally they just transfer that over to more diversified content, and they can kind of really do whatever they want, and their audience follows them around. Surely with some of crypto's personalities, we're not terribly far off of that, What do you think?
I mean, that'd be quite crazy, but I could see it, yeah. People like Gainsey, I think, would do really well in that. But no, the date went well. Just a little bit of fun, basically. Nothing serious.
How was the stream? For those unaware, for some reason that I refuse to even think about, Don agreed to do this. Thankfully, on his own channel, we would never soil Technical Roundup with such nonsense. But it was like a dating stream, right? Where you essentially answered questions and pontificated on meeting women in the 21st century. Now, look, immediately my cynicism comes from the following, and I've expressed these views to you before, that you're like tall, good-looking, charismatic, all that type of stuff. So why would you assume that the advice you'd give to someone who's like 5'5", stinks, has never left their house, that it's somehow transferable? Like there are certain things which certain wisdom that you can't impart, and features of you that are immutable in that regard, that don't transfer linearly when you're giving advice. Like, when someone who's really tall and good looking or whatever behaves in a certain way, you might give him the benefit of the doubt or think like, oh, he's mysterious or some shit like that, right? Whereas if someone who's a bit rougher visually does that, you'd be thinking, oh my God, like, get me out of here. So that's always been my kind of inbuilt cynicism towards dating advice or that type of stuff, because I think it really matters who's giving it, and to a large extent, their experiences are shaped by their own appearance and how people perceive them and so on. Am I completely wrong there?
No, I mean, I think you're right. But then again, like the stuff that I said was basically just
like brush decency. Your teeth.
Yeah. Yeah, like the bare minimum. You gotta live like a life that you're kind of happy about to be able to connect with people and like all that kind of stuff. And yeah, so I kept it very, very like applicable for everyone, I guess.
So no Sigma grind set type of...
No. I'm not really into that at all.
Yeah,
I just do whatever I want to. Like you just gotta be who you are, basically, but try to make that, like in general, try to work on yourself to be a good person before you do that. Because if you come and show up and you're kind of just like a super boring kind of personality, it kind of sucks, But yeah, it's just like super, super basic stuff.
Thank you for carrying our community through these dark times.
Bear market content.
Yeah, exactly. The final capitulation move would be me doing some sort of exercise, science, lifting, gym, whatever stuff. And that's when it's fucked, right? Because there are cracks in the armor, because I've started shit posting on my main Twitter, not in the reply section, like posting puns and jokes and stuff unrelated to the markets. So that's when like the fabric of the universe is like slowly tearing, because reply guy cred is like kind of crept up and made it to the surface where he doesn't belong, right? He should never see sunlight. And so the final step, the final capitulation would be like IRL content from me. And that's when you should be like long volatility or whatever else, express whatever market go up views you want, because there's no way that's sustainable or desirable for that matter.
I mean, I think like it would make a lot of sense. Actually, like a lot of people in crypto would like workout advice, whatever that means, and they don't really trust like most people anyway. I think it'd actually do really well. People would be interested, but
that's it. My new job, new income stream coming.
Personal trainer. Go the, what was it called? The parabola guy.
Oh god, yeah, Trav. Parabolic Trav. Yeah. Just in reverse order, right? If you know, you know. We should probably touch on markets at least very briefly, right?
Yes.
So I've got the monthly time frame up. And you know what it looks like, right? I've got 57,
Yes.
58 at the range high. I've got that midpoint, which you understandably don't like because it shouldn't be trend reversing. But hey ho, here we are. And then I've got the lowest close from, April, July, whatever, at 35 to 37K. Now, I don't at the moment see any good reason to trade away from or outside from monthly time frame parameters / levels. Like when they've been so good for so long and have been reacting at every level, perhaps even, as you mentioned, levels where you don't want to see a reaction if the market is strong. But it still remains the case that like the monthly time frame is really fucking good, right? And there have been trades in between. Obviously day trading is a completely different thing, the short-term rotations. But from like a directional bias and high time frame swing perspective, this time frame's really been putting in numbers, right? And just looking at it at face value, it looks like for the time being, 43, 47 resistance, 35, 37 support, resistance resisted. So the next trade is either the break of resistance or price trading back at support, which would mean 35 to 37K, which would also line up just below previous month's low, looking at candlestick analysis. Does any of that sound criminally wrong?
No, totally agree.
Yeah, fair enough. And then I'm looking on the weekly time frame as well with those monthly levels interspersed. There's nothing I love too much on the weekly. I know you had that cluster from January. I'm going to draw it on the chart there. We closed above it and then this weekly went below it. And we also have in technical roundup that if we close above it, it'll start to look pretty good. How are you assessing those chances heading into the week? And also just in terms of my own personal view, like I get why that level is important, but part of me is just like, it's so close to that 43, 47K monthly resistance that there is some sort of world in which case you eke like a green close through that cluster, but it ultimately ends up being immaterial. But that's kind of my only reservation. And also, if it were going to be like a compelling bounce spot, I would have really liked for this weekly to start getting saved like before the weekend, to give some conviction that this is going to be compelling support. It's one of those levels where I could definitely see it being resistance now, given how this weekly appears to be developing, certainly if it closes below it. But in terms of like bias flipping bullish at this level, I think for me, the monthlies above it just take precedence. I wouldn't be comfortable longing that flip just because of what's right above my head. So how do you rate the chances of this close and how it's developing? And what I said there about maybe hierarchy of levels.
Yeah, I agree with the hierarchy of levels thing. The monthly is just much better than any other time frame right now. And I think the chances of this actually closing green are very, very low. Especially because it would have to close quite green to make it above the resistance, right? Because
the top of the box, right?
Yeah, exactly. It wants to get above the top of the box, because if it doesn't, we're still basically at resistance, right? You could get like a green candle that still closes at resistance, and we still go down next week. So
it's like a holiday weekend now as well, right? Sorry.
Yeah, exactly. There's not really much going on. I think there's not going to be much volatility. Could be completely wrong on that front, but I think like in general, like I'm expecting, if anything, downside volatility, not upside volatility. I think upside is more likely to just walk it up. So that would take a while, and I think we don't have that time to close it nicely. So I'm team bear for now, and we'll kind of change my bias if something big happens. But the funny thing is, the volatility has been dying down in general, right? We've had a lot of volatility, even though it's been ranging, because the range from 60K to 30K is quite big.
Yes.
And now we're finally starting to see the ranges get smaller and smaller, right? So we'll see how that turns out. I could see the range break down, honestly, and then just reverse back up. Just
kind of a 30K failed breakdown type of thing, or you're talking more locally?
Yeah, both actually. Okay.
Yeah, makes sense. I mean, look, just even looking at the daily time frame now, and that's something I want to pick your mind on. For me, the monthly levels, as I mentioned, are so clear, and even on the daily time frame, they've been behaving really well. That's when you know that you're onto something in terms of level selection. Where even lower time frames, where the closers may not be perfectly aligned, they're doing good work, right? And like we saw with the failed breakout at 40, through the 40s. Once it closed below, it even gave you like 2 days of retesting that same level before the most recent leg down, and that's significant. But for me, just kind of eyeballing this, there's nothing on the daily time frame at the moment that makes me want to like step in front of this ahead of monthly support. So like monthly support is compelling on its own, but sometimes you might want to nibble at it early if you've got like really good weekly or daily levels that you in that area, even if it's slightly above, that you think might produce a reaction. For me, this range was kind of so ugly and structurally not very nice that there's nothing that makes me want to bite at this beforehand. I know you've got two structures, which I agree with, certainly for shorter term trading. I know we're such boomers, daily time frame, shorter term trading.
Nice.
But it's the daily trend line, right? Which the market's literally testing at the moment. And I know you also drew this like cluster, which I think in your stream you mentioned you weren't expecting much in the form of support, so you didn't have it. But now it's more compelling as a resistance. I think it's like the March cluster, right? Like around 41, 42.
Yes, exactly. Yeah,
so what do you make of those two daily structures? Because the trend line, it looks like it kind of closed above and then closed below. That daily box was just like the clearest level of resistance. If we're going to go low time frame for us at least, what's the daily time frame telling you at the moment?
So, like what I mentioned on my last stream,
the dating one, yeah.
No, the Wednesday stream before, that I wanted to see price get above both, because when the market is this choppy, right, and this is something that you can take away from this, I guess, when the market gets really, really choppy, you don't just want to have a single line of confirmation for like a breakout trade, because more often than not, you're going to get like a move through it, because there's just not that much bids and asks, and it's just easy to move the market around. And then like it just reverses the next day or over the course of the week. And that's why if it gets really, really choppy, you want to have like two kind of methods of saying, okay, this is actually like a genuine breakout. And that's why I want to see like both get taken out. So like if the bulls can take out both the trend line and that horizontal resistance, at that point you could argue that there's some momentum to be played, right? Because you still have, we're still quite far down from the all-time high, right? It's not like we're trading in the 60Ks anymore. We're trading in the 40Ks now.
I've barely noticed, yeah.
Yeah, so it's like there is room for upside, right? Like it's easy. Like if it finally starts moving, a move from 42, 43 to 52 wouldn't be surprising, and that's a nice gain, especially if it's amplified throughout the altcoin market. Because if Bitcoin pumps, the altcoins are probably going to go along with it, and then you have like some fun again. But you don't want to be the guy that just buys every single time you see like a green candle, because in choppy conditions, that's just going to that's just going to make you lose all your money. And then you don't have it once you actually get the momentum situations again that you can actually play.
So that your minimum requirement is that daily close through trend line plus cluster, which comes out at 43 plus, and then you think the probability of trading towards 52 is
quite high,
elevated. Yeah,
they're much higher than how it is now, because there's been a bunch of people that have been buying on the way down, because it always sounds like, oh, you should be buying this because it's low, and then you make much more money if it goes high. But it's always like a probabilities game, right? You don't want to be the guy that just has to buy 10 times for it to work out once, because that's just not gonna do it for you in trading in the long run.
Yeah, fair enough. I think that's reasonable. I could see myself missing that trade for sure if it happens, given my allegiance to the monthly time frame. But I've got a similar entry trigger. My argument has essentially been, now that we've had one, and it's what we wrote in Technical Roundup as well, right? Now that we've had like a very clear failed breakout at 44 plus, if the market makes its way back there again and doesn't find resistance, the likelihood that you get a second failed breakout is always lower, right? Like if you're constantly getting like double, triple deviations, like your levels are probably shit.
Yeah.
Normally you get like one good one, and then if it gets back above it, that's normally a continuation signal. So now that we've had the big ugly, anything back above 43, 44, I think becomes more compelling / puntable. But it's one obstacle at a time. It seems 40K is slippery for the time being. As for ETH, I'm looking at ETH USD. Really, this is a story that essentially comes down to the weekly time frame, right? And this is maybe a divergence that I want to get your opinion on because it might be interesting, whereby BTC fails to close above that weekly cluster that you had, right? But ETH is retesting like a similarly important, if not clearer structure at more or less 3K. Not the cluster from January, but, like the lowest close from the 20th of September, then the recent high from the 31st of January, that like obvious SR flip level, right? And there's been a bit of soak at that level, like, it hasn't completely bartered through it or reversed. I mean, it's ugly, it's choppy, but it's intact, and I guess in this market, that's already better than what we're used to. So what do you make of ETH weekly here at this level? What do you make of the close if it closes like roughly like this? Could this be kind of the leading factor that, BTC meh, because weekly levels aren't really relevant here, but ETH retesting a more important level, finding support, maybe that's what gives us our bounce next week. What's your take?
Yeah, whenever we're in this situation, I just try to stay away from the market because you usually want to have confluence between the two pairs, right? You want to have confluence between ETH and Bitcoin because if they're like bullish, if Bitcoin is bullish at like a bottom, very, very often ETH is going to put in like a nice structure as well that you can play. In this instance, ETH, in my opinion, is leaning on the bullish side of things and Bitcoin is leaning on the bearish side of things. And it's really hard to kind of gauge the market, whether it's bullish or bearish, just based on the fact that, I mean, if you pick ETH, it's bullish. If you pick Bitcoin, it's bearish, just market structure wise. And that's just not a really good environment to play because at that point, it's just basically, okay, are you bullish or bearish? And you can just pick whichever. And that's not really objective. It's just, you just picking your poison, basically going with whatever you think anyway. I think ETH leaning on the bullish side of things, but given the Bitcoin situation, I want to see ETH come back above 3.3K and then we can argue about like it going higher or not. But
so not a fan of the US divergence basically between
weekly
and ETH weekly.
Yeah, I hate it. It's really, really tough to trade in those circumstances. And the thing is, like, the market is really choppy and you can just tell by that, right? Like ETH and Bitcoin diverging is just like that happens when it's super, super choppy. Or if ETH is like just much, much more bullish, which could be the case, right? But I would want to see more for that to kind of make sense to me. Like I want to see ETH actually break that cluster that we had, that January cluster.
Yes, I was just about to say that, right? Like you might end up in a situation where next week both BTC and ETH rally, but those are rallies into cluster resistance, and that's a bit tricky.
Actually,
it's just on top of your head. I don't like those types of setups,
Yeah, exactly. You don't really have room to play.
I'm the most claustrophobic trader ever. Like if there's anything like too close to me, I'm like, fuck this, I'm not touching it. I think it makes sense. That's why I always like focus on areas which have a lot of space between levels, because you can be less accurate and still catch like a decent portion of the move. Whereas like longing support just because there's like and you end up like having a very important resistance just above you. The trade itself at that point is a bit questionable.
Yeah, agreed.
Yeah. I mean, we talked about Sol Luna AVAX in the newsletter. Again, trletter.com. We've been going for like, 2 years now? Something over 2 years, 2.5 years or something. And it's free. Also brought to you by the FTX app. You are the product. Haha, whatever that usual meme is. Like if it's free, you are the product. But yeah, that's a free weekly newsletter where it's just text and charts and not as much rude interrupting from me or shit posting about irrelevant market stuff. But, I'm looking at AVAX first. It just looks like a failed reclaim, same old at 86-ish. And then we had, I think, this higher low level closer to 80, which is kind of looking meh at the moment. As we wrote, I think the same logic applies, where if you get an 86 reclaim, the likelihood that you get another fake out is pretty low, and maybe you get that final push towards 115, or at least through the high at 100 or thereabouts. That would be cool. Luna, again, one of the worst. I mean, look, I hate to say it. Actually, I don't really care about saying it. I don't have any special allegiance to this coin, unlike most of the fucking people on Twitter, it seems. But this, I don't like this structure. I'm just drawing a level from the highest close, from the December high, and then weekly closed way above it, made a new all-time high, and the next weekly just bearish engulfed it. And it's like, what do you want me to say for a chart like this, like until that gets fixed? Because that's a range high failed breakout. Your normal target for that is the range low, right? Maybe the midpoint if you want to cope and play a bounce. But in general, range high failed breakout, your bias shifts only if the range high is reclaimed or if price reaches the range low, right? It either shows strength or gets cheap enough after a bearish pattern to make it worth punting. Like my eye test support is, this is what we read about in the newsletter without like drawing it, is somewhere in the 60s. That cluster, which kind of got double engulfed both ways, the weekly from December 6th. But really the bottom of the range is closer to 40 something, right? Like where the actual lows are. But yeah, until that gets cheaper, or fixes what's generally one of the ugliest patterns in crypto, I'm not too keen on this. And this structure reminds me of like the Solana, like the whole argument we're making about post fake out reclaims. It's not without precedent, right? So if you look at, I hope I can remember this correctly. I'm going to open up the Solana chart here for us, and I think it was on the daily time frame somewhere. Let me see. Because I remember not trading it, and I just had nightmares about missing that structure for the longest time. Let me see. Yeah, exactly. So if you go all the way back to like April, May of 2021, when price was around 40s, specifically the consolidation of late April into May, right? You see price went sideways, had a breakout, which was a new all-time high, and then probably the most bearish daily candle ever, right? That's the 19th of May 2021 candle. You know what I'm talking about, right?
Yes.
Sold USD. And so you had like a breakout, new all-time high, and then the market just vanishes, right? Just gets completely engulfed. And then if you look at what happened later, like it found resistance there and went even lower, chop, 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 chop. And then look what happened on the reclaim of that later on the 15th of August in the same year. It closed above the level where the fake out had taken place. And that was basically the start of its enormous uptrend, right? Yeah. So it's a really powerful signal when you have a clear level, a clear failed breakout at that level, and then price eventually makes its way and trades through where that structure took place. So for Luna, again, we're happy to be objective on this. I haven't got anything personal, or I don't hold this coin or anything like that. I don't really care too much for it. So happy to make the bullish case as well as the bearish case based on the evidence presented. As such, if we get a similar structure on the weekly time frame that closes through 98, 99, 100, whatever that may be, maybe that happens next week. Maybe it happens in 52 weeks, But whenever that happens, that's going to be one of the more compelling bullish momentum, trend ignition, whatever fancy words, number go up signals that you get in the market. But for the time being, that's not what's being offered. So my excitement is abated, to say the least. What do you think?
Yeah, I totally agree with you. I think like 40 is actually not even like a bearish target. 40, 50.
Which is the bottom of the range, right? Like Bitcoin's been to the bottom of the range, ETH has been to the bottom of the range. Like this, it's not like doomsday type of stuff, right?
Yeah, it's just typical kind of Monday.
Yeah, just another day at the office, right?
Yeah, it's like it's if you want to be like a full blown bear target, you target like 20.
Yes.
After something,
or just
like
zero because they sell everything and there's a death spiral and whatever.
Yeah, that is the bear hard argument that I've seen a bunch on Twitter. Like people are really freaking out, and I'm really looking forward to how this is going to play out. Like the Luna unravel or not unravel, whatever it's going to be, is going to be a lot of fun. Because if the prices go low and nothing happens, that is just like a good sign basically for Luna that's gonna make
it's
it
resilient,
through.
Right?
Yeah, and if something happens, we're gonna see quite the spikes downwards on a lot of things. So
it's simple. The devs just need to do something. Right? That's it.
Yeah, they're already doing something, right? They're buying shit coins at the top. But yeah, we'll see. We'll see. I'm excited for it. I think like 50 is like that seems reasonable with like an invalidation above 100 again, which just makes sense, right? So.
Agreed. I mean, you've got like a very obvious range high, very obvious range low. You can make an argument for a piddly bounce in the middle somewhere. but those areas aren't usually the best. They're certainly the least risk defined, right? Because you're more or less in coin toss territory as to which way it goes, and the bounce can put you offside even if it does make its way to the range low. It's just not a nice area to trade. Now, final chart. I've got the S&P 500 on the weekly. Obviously, markets are, well, I thought they were closed because of Easter weekend stuff, but, you know, this ticker is working, whatever.
Mm-hmm.
Low liquidity session at the very least, if there is a session. You can tell we're crypto traders because, like, time just doesn't matter, right?
Yeah.
TA on this is a meme, obviously, but on the weekly time frame, you know, if anyone's going to draw some sort of market structure lesson from this, this is sort of looking like a droopy lower high type of scenario. It's into an area of structure, you know, the January,
Yes.
17th of January weekly level, you know, kind of the massive stretch, inverted head and shoulders type of thing, if you want to draw it that way. But, you know, in terms of market structure, we talked about the break in market structure when that horrible 17th of January candle happened, where we're like, look, this is a weekly break in market structure in the main index. And we just have not had that since COVID crash, right? The follow through was there, but albeit somewhat slow. Then you had a mega engulfing rally, and that seems to be kind of just petering out at the moment. And, you know, on Weekly Open, I think Ledger showed like a super, super zoomed out version of this, saying this is not done anything. And you can already feel so much pain in all markets. Do you have any, I mean, probably at the very least, gut feelings about either this weekly structure, this market in general, the correlation trades, what have you? Like I saw Kyle Davies tweeting, when are we going to pump it and break the jump correlation bots, which I thought was an awesome tweet. I wish the likelihood of that were higher in my mind, but I don't really know who's going to be the one igniting that if it's not him. You know, if he's asking people to do it, like, what are we supposed to do, Kyle?
Yeah,
You know?
yeah. I think we are in an area of support, and I think this is going to be a really, really important week, just based on the fact that we are. Yeah, I mean, just structurally wise, right? Because if you imagine we get like another big red candle next week, then it starts looking really, really droppy. And there's kind of, we've seen these patterns before where they, in crypto at least, I don't know if the stock market guys have seen this, but where these rallies just bleed out and then you get like a massive nuke. So like if there's a spot to kind of hold, this is it.
Yeah.
And with regards to like the correlation stuff, I think that's not going to change anything. Like that's not going to change because we're going to just be the plaything of the traditional markets for the foreseeable future. I think I mean, Bitcoin's in a range and the S&P is moving all over the place, basically. So just kind of makes sense that we're like so correlated, even if you like don't believe in, okay, a Bitcoin and the stock market should be correlated. In this kind of circumstance, it makes a lot of sense, right? You don't really have erratic moves to one side or the other, even though it might seem so. Because, I mean, Bitcoin's just been going from 60 to 30 to 60 to basically back to 30 almost. So it just makes sense that people kind of look at the leading market, the biggest one, for kind of inspiration, for guidance. And I think that is not going to change until we break the range. Be that to the downside or the upside, doesn't really matter. But I think like the moment Bitcoin trades below 30K or above 60K, that correlation is going to break one way or the other. But before that, I'd be very, very surprised.
It could also break in terms of like magnitude of the move, right? Like if it nukes together, I think it's very unlikely that they recover at the same pace, right? Like
Yes.
whatever bottom comes in, whatever form that might take, there's going to be a kind of fastest horse effect. And it's definitely easier to push crypto around than it is for that market, right? So that's also worth bearing in mind. But yeah, I think market structure leaves a lot to be desired. And yeah, area of support, agreed on that as well. I think the weekly for the NASDAQ, very, very similar structure. Except it doesn't have the luxury of the same or similar type of support on the weekly, at least in terms of bare bones technicals. That just kind of looks like a more blatant lower high, which is, at least halfway engulfed the bullish engulfing candle that sent it up in the first place. So, meh is probably best I can do on that one, chief. Any other charts have your interest? Any narrative, price, whatever type of
No,
candlestick make boing narrative.
I honestly think the market is quite boring and is going to continue to be so. There's going to be obvious outliers, like it has always been the case that like you get one coin or one sector that kind of goes, puts in a little bit of a rally, makes it a little bit exciting, and then just bleeds it all out again. This is the kind of market conditions we're trading in. So like general market commentary, I don't think there's much to be said about anything like beyond what we've said. Because Bitcoin, ETH are driving the show. The altcoins just kind of look like garbage across the board, which is interesting because there's this like common narrative that if Bitcoin goes sideways, altcoins should be doing well. That's not really the case. Hasn't been the case for a while.
And the more recent version of that argument, which was, oh, there's so much like sector-specific crypto-native money now via venture firms, investment firms, whatever, that what you're going to get is sporadic sectoral pumps, even if the market... The thing is, their case, it's crazy if you think about it, because that argument was being made even in a Bitcoin bear market, right? That you'll get these sectoral pumps, idiosyncratic rotations and so on. Bitcoin's not even like below 30K or any type of stress point. And we're still not getting those sectoral pumps, right? So, like, how wrong could that argument be? Now, obviously, you and I know what's going to happen is whenever stuff is really easy again, you're going to have the new generation be like, oh, why do you even care about Bitcoin and ETH? Because I'm up 10 zillion% on whatever the new coin is going to be at the time, right? And that's always a totally reasonable perspective to have because, yes, there is like a big P&L multiplier divergence between those two. But if you want an answer to the question, why do you guys care about Bitcoin and ETH, just consider the last, 4-6 months of the market, right? And that should hopefully make that clear. But you and I both know it's going to come back to that, right? It's like, alts do really well. It's like, oh, boomer, I don't even care about BTC and ETH, boomer coins, and then fucking everything is correlated to the downside. That'll break eventually, right? Like, it's very likely as a feature of market structure, as market structure develops, this like super correlated to the downside relationship at the very least becomes less pronounced. And we do get what the fund managers have been predicting for this cycle, where you get like sectoral pumps and whatever else, but it's just not on the cards at the moment. And even if you're like a mega altcoin bull and that's where you do all your trading and positioning, and you buy alts when you think BTC and ETH are bullish, etc. Like, if anything, you should still be paying a lot of attention to Bitcoin and ETH because they're going to be probably one of the best indicators for when to sell your alts, right? Like when to take profit on those enormous positions, because you'll be up like 4,000x and something's a new all-time high and you bought it when it was a tiny micro cap and there's no resistance, there's no chart, the whole thing is pointless and the numbers don't make sense in your head. But you can always look at Bitcoin and ETH to guide you in terms of where to take profit, when to de-risk. When is that thing going to be at support? Even if it doesn't have technical support, you can just look at BTC and ETH and infer that stuff is going to bounce, including your altcoin. Like, I don't know, that argument to me is just, even if you hate BTC or you only trade altcoins, not taking those two seriously, I don't know. I've never understood it, but it comes back every cycle, doesn't it?
Yeah, it does. It's like one of the things that annoys the crap out of me. Is just, we have to deal with it. I've had to deal with it like a couple times already in my trading
like
career.
You hate me for asking for USD pairs. Like, there are people telling you not to look at Bitcoin and ETH. I'm not the enemy here, There are bigger problems, clearly.
There's few bigger enemies to fight. But yeah, I totally agree with you there. It's just, and especially like the comment about inferring what is going to happen to an altcoin when there's no support or no resistance by just looking at Bitcoin and ETH, obviously, because it works to the downside as well, right? If you don't have like a good support on an altcoin, but you really want to buy it because you think it's good value, you look at Bitcoin and ETH and kind of figure out where to bid it just based on those.
Yeah, for sure. I think that's one of those things you have to experience. You can listen to us talk about it, but until you give it all back, it's unlikely to be internalized. Normally at this point we do news stuff, but honestly it was a bit slow and boring. Like, there's the bit about North Korea being the hackers of the, Ronin bridge, the 650 mil, and obviously Elon trying to buy Twitter. And that was more or less it. Anything interest you there? I don't want to kick a dead horse when it comes to this kind of stuff. So if the news is a bit flat, I'm not going to, as I'm not a professional substacker, right? Like, come up with takes just for the sake of coming up with takes.
Yeah, I mean, With regards to the Elon Musk thing, I mean, I hope he doesn't ban me. I guess because for the people that like have been following my comments, I've been like not nice to him in comments, and I don't think it's come across nicely. Like people have reported me for it. His fans, I guess. Who knows?
Yeah, what could possibly suggest that he would be petty and has like an army of loyal fanboys? There's no evidence for that whatsoever.
Yeah, but in general, that's just one that I'm not entirely sure which side to root for, because one, I don't like the culture that I've seen at Twitter. But two, I don't like Elon Musk, and I don't like it being this kind of centralized. So. And I know he says he wants to decentralize it, but then again, like if you just look at what he did with Doge, basically, it's not really how you do decentralization, right? Just tries to make it all about himself, which makes sense, I guess. Yeah, I mean, it just makes sense if you're at the point where he is. That's just kind of how your head works, I guess. You just try to make everything about yourself, which fine by me, but I'd like that not to be the case for like one of the more important social media platforms. But it's not like my expertise, so it's just like my gut feeling.
Yeah, my conjecture on it is that the deal seems really good, like purely commercially. And if you consider just like the state of the S&P and markets in general, and someone offering you such a hefty premium, I think you know it's not the worst deal in the world, right? On purely commercial terms. As for the other stuff, I mean, I'm probably slightly biased because like Twitter is basically unusable now. If you're not a locked account, like the amount of spam, scam, whatever stuff is awful. And that almost makes you want to go for any other management team than the one that's there at the moment, because like the platform's like fundamentally failing and doesn't have basic functionality to like block obvious impersonators and scammers and who comment and then block you immediately, so you can't even see what they've replied to block. Like it's nonsense, right?
Yeah,
It's an actual,
that is
it's
true.
truly garbage. And you know, he said stuff like, I want to open source the algo so you can kind of see what type of information is being prioritized or whatever. My immediate reaction was, if you open source it, surely it just makes it easier to almost game it, right? And to make whatever content you want kind of signal boosted if you know how the algorithm selects for content in general. I'm somewhat skeptical as to the extent he actually thought through all of this. Like, does he have just like a management team ready? And to, you know, if he were to be in charge of it tomorrow, would he know exactly what to do and who are the people necessary for the job? And would he be spreading himself thin with, you know, Tesla, SpaceX, and Neuralink, and all this other stuff? I don't know is the answer to like any of those questions, but there is some room for skepticism, you know?
I mean, we've done the whole, okay, you have like a shitty government in politics, right? And then you just try to get it out and get like a better one, or like a completely different, radical other one in. And historically, that's not done too well. But yeah, I don't know. That's kind of my gut feeling, where it's like, yeah, those people, they're not really, like, it doesn't really feel like they're doing their job well. But then if you get like someone unqualified in that position, I could see the same. Yeah, just being worse. Exactly. But we'll see. We'll see. It's gonna be an interesting arc anyway. Like if he like legitimately just buys it, that'd be fucking hilarious.
Yes.
I just hope it doesn't come back to bite us.
Just give us the blue checks, guys. It's fine. Let us into the Citadel. Just as a reminder, if you enjoy Casual Friday, leave a like on the video, subscribe to the channel, leave us a comment if you're still listening to us drone on about non-market stuff. We love you. We appreciate you. Speaking of non-market stuff, there's a Q&A section. We revived, or attempted to revive, the Technical Roundup Twitter account. God help us, to ask some, you know, as a call for questions. And I think we've got a few interesting ones that it may be worth riffing on. And given it's quite a slow week, both kind of TA-wise and news-wise, do you want to go through a few of those? What do you think?
Yeah, I can hit a few. Should I like say the names of the people that asked?
Yeah, sure. Why not?
Okay, so I'm gonna butcher every single one of them.
Do.
But Hasib asks, why do altcoins follow Bitcoin? He was looking through the markets and he was like, okay, wow, this is is wild.
Because they have to. I'm
Yeah,
gonna let you answer. Let me open
that?
the door real quick. I'm gonna let you answer that in the intro.
Okay.
I know this is, your wheelhouse, given what your watch list looks like.
Yeah. So in general, like, I mean, it's like asking why do people follow the big guys, right? So like even in the traditional markets, if the big companies go down, everything else goes down with it. In crypto, it's even more so. Like people just look at the majors basically, and if Bitcoin goes down, people are going to be more afraid to be in altcoins, and they're going to sell those too. And yeah, that's like the easy answer. In general, there's just a lot of algos that just trade this kind of market around, and they kind of look at Bitcoin and ETH as well, obviously, to kind of move the altcoins along. And yeah, I don't feel like he asked also like if that's gonna change or not, and I think it's going to at some point. The bigger the market gets, like you can have a divergence there, but I don't think it's going to like necessarily go away forever at some point. Like you always have like the big guys just influence the market. It's always been the way that markets have been trading. And it's always will be the way, I guess. That's kind of my take on it.
Sorry, bro. My house is just so big. It took me ages to get out of my mom's basement. No, the thing is, that's just my polite way of saying I need a piss. When I'm like, oh, I must open the door. Let my dogs in. I'm just there, like, in the bathroom. Anyway, too much information. Yeah, why do alts follow Bitcoin? Well, I mean, the big boys trade the big caps, right?
Yeah.
And also, I think a lot of it is so there's like a kind of beta effect there, where they have models where if Bitcoin goes up 1%, Uni goes up 3%, and then if Bitcoin goes down 1%, whatever coins go down greater than 1% type of thing. So that relationship's been about since like forever. So that's part of the explanation. I think part of it is also just habit, right? Habit and not really tradition, but just like this has been a feature of market structure for a very long time now. And you do get periods where altcoins meaningfully decouple. But at the end of the day, for most, I think this is still mostly true. Alts are still just collateral, right? Like you do have those positions, but if you ever need something to sell off to cover your bigger positions or to add margin to them, it's going to be your less liquid, lower cap, less important, smaller position sizes, right? In the form of altcoins, which is part of the explanation as to why you see that beta effect.
Yeah. And a lot of people are just invested in all of it, right? So they have like Bitcoin, they have altcoins, they have all of it. So if they sell one thing, they're going to sell the rest as well. So it's just makes a lot of sense. In general, like it's an easy sounding question that isn't really too easy to answer. Agreed. Because you could easily make the case that should not be the case, but
just say the word algos makes it sound really clever, which is also true, right? That's the actual answer. It's like why does this stuff go up when it goes up and down when it goes down? It's like algos, essentially trading the correlation.
It's the same thing with Bitcoin and the S&P or the Nasdaq,
correct?
Where algos kind of move that. Not only, obviously, like traders look at it too and they're like, oh shit, the S&P just nuked 5%, and I don't see a reason why Bitcoin should be holding. So I'm just going to sell my Bitcoin to kind of take advantage of that fact. And it's actually been doing okay-ish, right?
Yes.
So
I think in like the simplest answer without, too much inference is in most cases when people see Bitcoin go up, they infer that altcoins are going to follow. And when they see Bitcoin go down, they infer that altcoins are going to follow. And you get some, exaggerated effects of that. You get some divergences. You can still look into relative strength. That's where all the interesting stuff is. But fundamentally, it's just a second order effect, if you will. And that's been around for a while. It's been the case for a while. And that's how the market trades it at the time of recording, right? Maybe we come back to this in the future where we live in some sort of like high-tech society where you can hedge with crypto and all sorts of stuff. But we're not there yet. What's the next question? Hopefully we've answered that there.
Johnny asks, experienced traders consistently say shorting is too hard. What are the biggest pitfalls to shorting and ways to avoid them?
Go on, as resident expert of the red button. I feel like you should take over.
Yeah.
On
I mean,
something useful in.
I've hung up my mantle on the shorting side of things. But the reason why I say, and I say this too, so it's not just like people on Twitter, it's also me. The reason why I'm saying shorting is hard, right, is because we're expecting the market to go up, right? So if you're shorting, like in general, our bias, and this has been correct for the most part, long-term Bitcoin goes up, right? So if you buy and you wait long enough, you're going to be bailed out by the market no matter how shitty your buy is, right? Let's say you bought 60K. There is going to be a time in my mind anyway, where we're going to trade above 60K again, right? So even if you do the most shitty buy, there's a chance to get lifted out by the market just being kind. So there's an underlying bullishness to the market, which makes longing much, much easier than shorting. And on top of that, the short side of things, like the market just moves really nicely on the up moves. You can kind of see it's just like it's up only. Whereas on the down moves, you get like a bunch of chops. You get like 50% days to the downside, then it goes sideways, drops another 10%, and then squeezes back up 30 and just completely screws you over. It's much, much more difficult to trade that for the average person than it is to just trade the uptrend. And the worst part in my mind about shorting that kind of screws over beginners, and why most people want to like just tell people to not short, is basically if you short too much, you get into this really bad headspace because you stop thinking about buying the dip. You just like want to see it fail, and most people just cannot turn that off, and they start shorting and it goes well, and then they're like trying to compound that the entire way down, and eventually it just blows up because the market is underlyingly bullish. So at some point it's gonna just reverse on you, and that's been like the one kind of attitude that I've seen that makes people blow up. Like I've rarely seen people that are just underlyingly bullish get blown up in the market. It happens, but it happens much, much less so than the people that are just bearish because...
And it's leverage that gets them, right? For the most part.
Yes.
They just start doing like altcoin leverage, 20 positions at the same time. You're like, oh boy. You know, I've seen this movie before. I think it's also like contextualizing it in terms of upside and downside potential, right?
Yes.
It's like arguably, in theory, infinite to the upside and limited to the downside, which is true as well. Also, I think just anecdotally, very often when shorting becomes attractive on like a trend basis, and I think, you know, if you're talking much lower time frame rotations, I don't necessarily think that it's harder or less favorable, right? I think that's where the line becomes much more blurred. If there's just like a lot of liquidity and the rotations are clear, then a lot of these arguments are slightly less persuasive. But certainly on like a swing or a trend following basis, like how many times have you and I seen, Don, like a downtrend which takes months, right? And it's in the context of a larger market downtrend. So like liquidity's shit and everything's dry. It's kind of just bleeding. Not much is going on. And then you've just got the Jesus candle, which wipes out like 2-3 months of P&L, price action, whatever, within the space of like a week, right? So that kind of reflexivity, at least anecdotally for me, tends to stress shorts much more than it does longs, right? Like in a downtrend, that could be normal, and you still get like downtrend continuation. Just your position's been blown out at that point. It's less frequent, or it's somewhat more orderly in an uptrend. That type of behavior. What else is there? I agree with you about the mindset trap. It's very powerful. You know, it's the old meme that as price goes lower, you move your targets lower, right? And eventually you never get filled. I also think a lot of the ways, even if you're just hedging, and you and I have discussed this privately before, like in theory, the perfect hedge is like a 1x short on an inverse future, right? Because of the way convexity works to the downside. The issue is like, that's a trade, you know? It feels like a trade when you're in that position, and you want to manage it as a trade and not as a hedge. And you get into the headspace of managing not having exposure as opposed to looking for the most opportunity, like, you know, the best opportunity to buy the dip or get positioned. That's why I haven't like actively been short. I still do on like intraday low time frame stuff from time to time, although it's been a while, to be completely honest. But when it comes to risking off, nowadays I'll just move into stable coins and then happily wait, just basically be a sideline bull, right? And just wait for some sort of bullish trigger to let me pour those fake dollars back into the ecosystem, as opposed to like holding, because you have to do like almost more than twice the work. You both have to manage a short, and then you have to close that position and then also rebuy. And a lot of the time, those two things aren't the same, right? It's not always obvious to me that as soon as you close your short, that's also when you rebuy. So there's like a lot of decision making to be done, which is a lot more complex. And the mindset trap that comes with it is usually not worth it, because as you mentioned, it's almost like an irreversible thing to a large extent, you know, unless you're really experienced and know what you're doing. Are we missing anything?
Yes, one thing, and that is like most people learn about shorting at the worst possible time.
Oh, great point.
You get into the market, right, as like someone new to the market, and you obviously want to buy, right? Like no one gets into a market, it's like, I'm gonna short this market. It's just very, very rare that happens for like an inexperienced kind of person joining any kind of movement. So like you get in the market, you want to buy, you buy, stuff goes up, all is good. And then suddenly stuff drops, right? It goes down 50% and you're like, holy shit, this sucks. And then you read about like people shorting on Twitter, and you see the big short and you're like, oh shit, I want to do this too. I want to be one of the cool guys. But the market's just dropped 50%. And we said like that the underlying, at least I said that the underlying bias of the market is usually bullish, right? So the market is down 50%, could go down another 50%, but at some point it's going to obviously bounce, right? And it's obviously going to reverse again. And then you're learning about shorting at basically the bottom, or like at a really, really bad price level. Just based on the fact that, I mean, obviously you didn't really care about shorting at the top, because at that point everything seems super exciting. And that is why I think why people just tend to say, okay, I just don't, because you're only going to be interested in shorting when prices are low. It's just how, like,
it's just like that trading saying, right? As soon as everyone agrees on the trend, it's close to being over, right? It's
Yep.
sort of reminiscent of that as well. I think that's a pretty complete answer. As I mentioned, I think the small caveat is for like real pure day trading and like shorter term rotations. A lot of these arguments, like it's much more of a not a shit deal. But overall, as a medium to long term crypto trend type of thing, yeah, it's you know, all the, even just to pull out a completely type of almost appeal to authority type of argument. But none of the guys that we know who are like, who've done super well, I think this includes us to a large extent also, although your early story is just like a complete villain arc. But overall, the people who've done well in this market, it's very rare that you'll look at them and say, you know, what has been the main driver for your success? And they're like, oh, it's like, then they kind of replay their version of the Big Short. You know, there's usually aren't the ideas or the trades that compound to make someone's quarter, year, whatever it may be. So yeah, that's just kind of a survey of the land.
Yeah. I mean, the thing is, you kind of, to make it big by shorting, right, you kind of have to make a lot of trades, because like, let's say you have $100 to your name, you get into the market.
Whoa, easy in this market, bro. Like, where can I find this person?
But yeah, let's say you short with it, right? You short even on leverage, you're shorting with $500. It goes down 50%. You make a bunch of money, but you're not rich yet, right? So you have to take another trade, and then the market's already down 50%. So like, if you're short biased, squeezing another 50% out, compounding what you've made, it's going to be a little bit more difficult in general, and it's going to be hard to do on the short side. So you kind of have to do this over and over and over again to run it up, right? Now, on the bullish side of things, you buy a shitcoin like Shiba or whatever, with your $100, and then you come back 3 months later and suddenly it's like worth 100K, a million or whatever, just based on the fact that like stuff that goes up can just make you much, much more money out of little money, I guess, than the other way around. Like shorting stuff, you have to have money to short stuff, to make a good amount of money. So like, yeah, you said it earlier as well. So
now the market's going to go to like 10K, and they're like, I wanted to short, but then I listened to Casual Friday and I missed out the entire move, and now crypto just fucking fell off the face of the earth. That'd be great. I think we've answered that fairly well, hopefully.
Yeah, no financial advice.
No financial advice. Yeah, as for shorting or Shiba or whatever other bombshell Don was throwing in there, all hypothetical. What else we got?
Cartman San asks, best way for small accounts, roughly $10,000 to grow.
Shorting. No. I think it depends where you are in the market cycle, right?
Mm-hmm.
But I think I probably wouldn't start with like leveraged Bitcoin/ETH trading. It's just a shit idea. The size of the moves, the risk of blowing up if you have to use leverage to get enough position size to like make it worth it. I mean, the likelihood of you just not understanding the contracts that you're trading and over risking, and even having the allure of over risking via leverage, you probably bite that temptation at some point, and then the odds of survival just completely plummet. I mean, as I said, the likelihood that you have an edge consistently, directionally trading those instruments, pretty not great. Don't love those odds. I think you have to look at the market conditions as they are. If it's like an uptrend, upcycle, bullish cycle, whatever, obviously in general things are easier. And then I think for the most part with smaller accounts, you have to kind of dance on the edge of the curve, right? The risk curve specifically, because that's where you're going to have a comparative advantage because you don't have size constraints, right?
Yes.
And you don't have liquidity constraints. So, a recent example, as in recent cycle example, would be, for example, NFTs. And I mean, mid caps and the dog coins and meme coins, whatever, I think is also valid. But like, whatever the innovation of that cycle is, which doesn't require a lot of size to trade, and normally it doesn't because by definition the market cap's small or whatever else. I think doing a lot of experimentation, to say the least, in those sectors is really good. So, early DeFi, that would have been like food tokens, yield farming, Uniswap aping, and then it was NFTs and meme coins. So there's always something. If the cycle is friendly and it's clear, what the end of the risk curve looks like, I think spending most of your time in that quarter, that furthermost quarter, is probably the best use of your time. I don't know what you think.
That's actually the exact same answer I would have given as well. So like DeFi.
Let me copy your homework, bro. Okay, bro. Just make sure you change it slightly.
So yeah, getting into like DeFi stuff is much easier when you do it or did it with like smaller size. The same with NFTs, right? You can sign up to whitelists. They're going to give you one spot or two. That's been the case for a long time. You just sign up to all the whitelists, try to get in, and then you see, okay, how's the hype? Like how well is it doing on Twitter? How well is it doing on the Discord service? All of that stuff. And if it does well, you mint it basically. And that way you can multiply your stuff relatively quickly. It's not as easy as pressing like a buy or sell button, but it's easier in a sense because the upside potential is much larger. It's not a thing that people can do with bigger size, right? So you kind of have to figure out where's the place where I can use what I have the best. And that is not going to be on the leverage casino. That's going to be somewhere where innovation is happening in some form or another. And that we've seen a bunch of people come up with nothing and suddenly like they're millionaires and like are all over Twitter. And that's almost always at least in the last year has been like the story. Basically, they tried something early and then just went all in basically. Obviously, you don't want to go completely stupid.
You're buying lottery tickets with your small size, right? Basically.
Yes. Yeah. And the good thing is, right, like it's the odds are like astronomical in comparison to a lottery ticket. And the odds of like blowing up are like, I mean, there are odds obviously of blowing up, but it's just the returns can be nuts. And that's the best I can give you. Now, obviously, like Cred said, it's a little bit problematic market cycle wise right now. So you kind of have to figure out how to protect yourself when the market kind of goes against you. And right now it's not really in a spot where any of that seems like a good idea. It's much better, I think, to just learn about the market and then see, okay, what's up? What's going to be the next thing? Like, is it going to be like DeFi again? Is it going to be something completely different? Is it going to be NFTs again? Could be. I don't know.
Or some ecosystem plays, or the next
exactly.
vertical, like GameFi, yeah. And you can still make those bets, right? Those market caps right now are just fucking non-existent, depending on where you look. But I agree, it's far less obvious than when you have the wind blowing in your back, at your back, whatever.
And the crazy thing is, like, Bitcoin can go, like, let's say Bitcoin goes from like here 40K towards 70K, right? And you're like, ah, shit, I missed like that move, and it's probably not gonna go, like, it's gonna maybe go to 100K, but then it's gonna like chill, and I missed like most of the move and I fucked up. But you're actually in a really good position at that point to find this kind of stuff, because like when Bitcoin has had its bullish move, a bunch of people are going to be releasing stuff, and in general, the hype is gonna come back again. And at that point, there's going to be plays like that to be had again. So even if you're like late to the party, right? Like, let's say you have your 10K sitting and you just like missed the entire first half of the Bitcoin move, you're still going to be able to apply that in a different market, in the Okra market, or like whatever, in crypto somewhere, where you can make much, much more returns than on Bitcoin. It's just, the problem with it is for a lot of people is that it's hard to get in size, and you don't have that problem. So it's really nice position to be in from like a returns perspective. It's just you have to pick your battles wisely.
I can confirm I've got no problems getting in size. But yeah, good, good lessons all around. It's not about your size, it's how you use it, basically. What we've covered there.
We're back to the dating stream again.
Straight, yeah. But yeah, TLDR, hope the cycle's on your side, and then go out on the risk curve and buy lottery tickets, basically. And don't fall for the leverage trading trap on sizing up on something where you have no edge. Pretty
perfect.
Decent answers there.
Next question is from Jigs McFly. How do you fine tune your entries? I often have a level where I know I'd want to long or short, but I'm not able to get a trigger with proper risk reward. Also, how do you test your strategies?
As for the level stuff, for me, it's pretty simple. A lot of the time, if I think the structure is really good, I won't wait for a trigger at the level. I'll just smack it at the level, because that's what my idea is based on. Now, yes, if it's, for example, there are nuanced exceptions. Like if a level's been tested a few times, I think the likelihood of a deviation is higher now that it's done its job. And I want that kind of confirmation or further evidence that this is going to be support, or they are going to try to sell through it and fail. I'll wait for, the standard type of reclaim pattern we've talked about a million times on a candle closing basis. But I think in general, as a starting point, if I think a level is a good buy or a good sell, I'll buy or sell at that level, because otherwise it's almost a separate trading idea from what I originally conceived. Another thing you can do is just refine levels in terms of timeframes, right? Kind of scaling up or scaling down. So you've got like a monthly area, which is quite big. You go down to the weekly, see if you can narrow it down, and then to the daily. And then depending on, whether you're laddering entries or not, or exactly where you want to do business, maybe there's like a very clear lower time frame inflection point within that larger level. You can also just refine by making your time frames lower, and therefore getting more granular structures or levels in general. Make the box smaller, to use that kind of casual example. As for the testing, the strategy type of thing, geez, I mean, I don't. The thing is, I'm a discretionary trader, and I don't believe that two setups are ever the same, which is probably like an unpopular opinion or whatever. But I truly believe that, especially as a discretionary futures data plus candlestick make boing punter. So I don't go for any like intense quantitative backtesting, whatever. I kind of have a general idea of the type of price action which signals absorption or that there's participation at the level. And then if it's a new setup, honestly, I would either I intuitively know there's something there from observation, or if I really want to go back and test, I'll do a cursory kind of eye test of how this structure has acted in the past, or if it's like a moving average or an indicator, just kind of a eye test, how often has it worked and what have the fake out signals been and so on. And then really the best way, even if it's not a lot of money, is to actually deploy the damn thing and see how it works. Don't need to go all in basically, but if you want to see if something works, try it. I hope I've answered those too. What do you think?
Yeah, I agree with the trying part, especially. Like, I mean, just do it, and then you see if it works or not. Obviously, you don't want to put your house on it, but you want to like try
Just
it
a
out.
shed.
Just a shed, yeah. And then with regards to the fine tuning entries, the time frame stuff I do a lot.
Yeah.
Actually, like when I really want to get like a good entry, I like when price hits monthly support, and then I look for the support lower on the weekly time frame. Like sometimes you can just like Pico snipe bottoms. You get your bias from the high time frame. You get like your general area that you want to trade from the little bit lower time frames, and then from the low time frames, you kind of get the perfect entry where you either get like a liquidity hunt, stop hunt, whatever you want to call it, or anything like that, and then you can have like a really nice risk defined setup just based on that. That's like one of the best ways I think to get it like really nailed down. But sometimes if you like overcomplicate things, like it's at monthly support, and then you just try to like gigabrain it, sometimes it's gonna run away from you.
I've done that so much, yeah.
Yeah, and there's something that you're just gonna have to deal with. So there's always ups and downsides to this. If you want to have the perfect entry, it's gonna involve a lot of like moving down time frames, waiting for stuff, and then it also involves sometimes you just don't get it, right?
Yes. Especially if you're swing trading, being super precise with your entry is like not important, right?
Yes.
Like if the market's around 30 and you know that it's if you're right, it's going to go between 43 and 45. It doesn't really matter whether you buy 30.8 or 31.1, right? Which is part of the reason where I say sometimes, you know, if you've got an idea, you just have to smack it. Or as we both do sometimes, if you know a level is very likely to be good, and price on a low time frame is like turbo nuking through it, you can make a fairly decent inference that if my idea is correct, this portion of price right now is likely to be the wick of whatever this move is ultimately going to be. And so you can just buy it or enter based on the perceived discount you're getting on your entry, or, you know, bonus you're getting on top of your entry. So there are loads of ways to go about it. I definitely agree that you want to start quite simply. If you want to, if you've got the problem of like your entry area is too big, that's a simple fix with just using lower time frames to refine existing higher time frame areas. But after that, I think in terms of entry criteria, it's much easier to start pretty simply, either just trading the level itself or waiting for like some sort of time frame candle close above or whatever else. Just kind of build the foundation based off of that. And then if you want to refine it further, like bring in a footprint or lower time frame price patterns, whatever it may be, or like, you know, cumulative candle closes and so on. All of that is legit. But for most people listing, it's going to be helpful to start with really higher time frame stuff, refine it on lower time frames, and then come up with replicable, easily identifiable entry criteria that, you know, you can spot pretty easily and don't give a ton of space for ambiguity. Because your discretion when if you're a shit trader or if you're new, isn't worth shit, really. Like that comes from experience. So don't give yourself too much room to FUD yourself out of areas where you know you should be doing business more often than not.
Perfect. I think we answered that all right. That's the last one.
Good. Duck, what's the plan for this weekend? Anything, you know, what's on your mind? What's on your radar? How are you spending your time? You know, we're both not super active day to day at the moment. So, you know, where are your priorities?
So I've been getting into at least started to get into triathlon. So I'm going to train a bunch.
Running through demons.
Exactly. You got to have endurance to make it through the bear market. But no, I have like a date on tomorrow and Saturday, and I'm invited to a birthday party on Sunday. But that's basically it for me on the weekend.
Not bad at all.
Yeah, a bunch of training and then birthday.
Obviously, a Thursday follow-up stream to the date, right? As to how it went. The people demand it.
No, the dating stream is on ice until someone else, preferably you, agrees to come on, which ensures that it's not going to be happening again.
Yes, exactly. Given my absence of a track record, that seems to be correct. Sounds fun. Yeah, I'm still doing, like, I'm traveling a bit. Finally, during pandemic stuff, I just didn't bother. It was too much of a pain in the ass. So doing a bit of traveling, same old resistance training stuff, because these bags are heavy, man. Someone's got to lift them.
Oh shit.
And also lift it. At some point, it's going to become appropriate to lift offers in the market as well. So I just want to be fully trained and physically prepared for that time to come.
Yeah, both working on our like ability to either survive the market or lift the market out of
yes,
bear market
yes, we're doing
territory.
the important investment stuff. I mean, we both know it's going to nuke as soon as stuff is interesting again, right? It's like the late nights and all this other bullshit.
Yes.
So kind of enjoying youth while we can, to some extent. I really think that's it. Nothing else has kind of massively got my attention. I mean, obviously following geopolitical events and ongoings, as depressing as they are, is another thing. But in terms of crypto stuff, yeah, as I said on Twitter, and also people just like get really annoyed when I tweet like not vague stuff, but I'm like, yeah, you want 30K to hold, and someone was like, oh my god, Cred says it's going from 40K to 30K. I'm like, that's not the point, right? Like, I'm talking structurally, you want this consolidation, the monthly 35 to 37 to hold, and maybe you get like an inflation blow off and then just like a low volatility reaccumulation or floor being set. Because if it's not that, it's really ugly, right? Like the 30K breakdown scenario is literally 6K all over again, and that's not pretty. So if you want the more surgical level-to-level like day trading stuff, and we do it on Monday markets. I do it on Monday markets, as far as my stuff goes, and also the newsletter has very like specific levels and shorter term ish ideas and so on. But like Twitter is for pontificating, it's where you do your vague hand wavy gestures about the market, and that was kind of the point I was trying to make with 30K. I didn't mean it's going to 30,000. It was more the case of you want this consolidation structure to be where the bottom takes place, because the alternatives are 30 to 50% lower. That's unfortunately the point I was trying to make. But yeah, that's just to end on a positive note. Looks like fitness stuff, real life stuff, healthy hobbies. Because, so this bear market stuff, or just when prices like this, pretty easy to fall into less healthy and bad habits. So good for us. Pat on the shoulder for choosing what we've chosen. I'm just looking forward to the day when you're some real life dating show celebrity person. And I'm like, oh, that guy, I knew him as Don Alt on the internet all those years ago. We used to have a podcasty type thing together. And now he's on Epstein's Island. Things change pretty quickly.
Oh, fuck off. That's below the belt. No, I don't think I have the personality for it. I'm legitimately surprised people even listen to it. But I mean, appreciate that people care, I guess, about my opinion.
I really think it's going to be some sort of bottom signal when I start pumping out like exercise science content and arguing with these like skinny fat crypto bros who think fruit and seed oil are like the worst thing in the world,
Oh, yes, I'm so down.
It's like, you weigh 70 kilos. Why should I consider your opinion about carbohydrates? Like, you're not a serious person, If a gust of wind would blow you over, why are you talking about nutrition?
You're like, gonna 100% get added for this one. I love it.
Oh, it's great. Yeah. I'd go full, if you think I'm antagonistic when it comes to markets, you should see when it's the topic of training, nutrition, whatever. That's when my ugly side really comes out. Okay, cool. That's all from us, I think. If you enjoyed this episode and our rambling, leave us a comment, leave us a like, leave us a subscription. Have a wonderful Easter weekend. Thank you to FTX for supporting the stream. Get the FTX app on whatever app store device you use. Buy the dip, sell the rip, get some exposure, and then wait for the market cycle to bail you out. That seems to be the prevailing logic of the Bitcoin quarterly, yearly chart, whatever it may be. That's all from us. See you on Monday. Take care until then, and bye-bye.